Hello everyone. This video is based on few important terms related to union budget. First, let us understand the meaning of the term union budget. In India, we follow fiscal federalism. That is, we have a type of hierarchy which is followed. We have the local government, then we have the state government, and then we have the central government. The budget, which is declared by the central government of the country, is known as union budget. Now, first let us understand the meaning of the term budget. It's basically a statement which gives us an idea about the income and expenditure of the government. It gives us an idea about the sources of revenue for the government and the areas of expenditure of the government for the ensuing financial year. If you go through the documents of budget, you will come across the budget of the previous year, the budget of the current year, and the budget of the coming year. Now, when you read the documents related to budget, you may even come across the term size of the budget. Let us understand that budget follows the concept of double entry bookkeeping system. It means if each and every transaction is recorded properly, the total of receipts will be equal to the total of expenditure. The size of the budget for the financial year 2023-24 was 45 lakhs 3,097 crores. Definitely, it's a huge amount because it's related with the entire economy. Now, when it comes to budget in the election year, this is the year, let us say 2024, in which we know that Lok Sabha elections will be conducted between April and May 2024. Generally, it is said that in the election year, we have two budgets. First is the interim budget, kind of say temporary budget, and the full-fledged budget, which is generally declared in the month of July. Now, when you come across the documents related to budget, you may come across some important terms. Generally, it is said that budget has two important components, the revenue budget and the capital budget. Revenue budget does not affect the assets and liabilities of the government. It will not affect the assets and liabilities of the country. Revenue budget is further classified into revenue receipts and revenue expenditure. And then the second component of budget is capital budget. Again, when it comes to capital budget, it is said that capital budget will affect the assets and liabilities of the country. Capital budget is further classified into capital receipts and capital expenditure. Let's take up some examples related to revenue receipts, revenue expenditure, capital receipts, capital expenditure. When it comes to revenue receipts, it includes the tax revenue earned by the government. Now, when you speak about the tax revenue earned by the government, you can take up the example of corporate tax, income tax, wealth tax, custom duty, excise duty, GST, tax collected from the union territories, and so on. Revenue receipts can also include the non-tax revenue. The sources of non-tax revenue are interest receipts, and that is the government receives some interest from the investments made, from the loans given, dividends and profits from the public sector units, surplus transfers from RBI. Basically, we know that RBI is the apex of the monetary or apex of the banking section or the banking sector of the country. Any surplus with RBI is later on transferred to the government. Receipts of union territories, and it also includes the grants and the donations received by the government. Now, when it comes to revenue expenditure, revenue expenses or a revenue expenditure includes the salary paid by the government employees, the wages paid by the government, the interest payments of the government, the subsidies given by the government to the people, the administrative expenses, and the pension provided by the government. Of course, there are a few more examples, but these are only the important ones which I considered. You may even come across the term capital receipts. Now, capital receipts, we have non-debt receipts, means money received by the government, but not in the form of a loan. Non-debt receipts of the government includes revenue recovery of loans. Let's assume that Indian government has given loan to some other country and the other country has repaid the loan. Sale of other assets and say disinvestment. Sale of other assets can also include some gold reserves if required. And disinvestment is nothing but government selling the stake of its public sector units to the private sector. Capital receipts will also include the debt receipts. Debt receipts means money received by the government basically in the form of loan. It includes the market loans. The government borrowing money from the market can be considered as part of the debt receipts. Treasury borrowings, that's the external debt, that is government borrowing money from the other economies or international institutions. Money collected by the government through sovereign gold bonds and receipts from the international financial institutions, kind of deposits made by them into Indian economy. Now let's analyze capital expenditure. When it comes to capital expenditure, it includes the money spent by the government on purchase of assets like land and building. It includes investment made by the government in financial assets. It also includes the loans and advances given by the central government. Now, the last, say, approximately few budgets, you must have come across the term capex in the budget document. It is generally said that when the government goes for capex budget, the main aim of the government is the infrastructure development of the economy. Now, when you speak about the term budget speech, it, it is said that the budget is generally declared by the finance minister of the country. And budget speech in India, uh, in fact, we have two different parts, part A and part B of the budget speech. Part A deals with the areas of expenditure and part B deals with the sources of revenue. This is the basic difference between the term private finance and public finance. People like you and me, we will first think about our income and then we'll think about our expenditure. Whereas in case of the government, government will first think about the expenditure and then the government will think about the income. So these were all the important terms related to budget. Thank you.